Let me guess how this started. You were scrolling Zillow late at night. Not seriously. Just looking. You saw a house. Not a mansion. Not a luxury place. Just a normal house. 3 bedrooms. 2 bathrooms. A small yard. Then you saw the price. And your brain instantly tried to make it work. If I made a little more. If interest rates drop. If I wait 1 more year. And then you asked the question everyone asks. How much do I actually need to make to afford a house? Not what the bank says. Not what social media says. What you really need. Because in 2026, the number most people are using is wrong. Not a little wrong. Very wrong. And that mistake is costing people years of their life. My name is Luke, and I spend way too much time thinking about money, housing, and why smart people keep making bad decisions when it comes to buying homes. If you make a decent income, but homeownership feels further away than ever, or you are scared to buy because you do not want to ruin your future, make sure to subscribe. And if this video helps you, give it a thumbs up. Now listen carefully. This video is not going to tell you what you want to hear. But it will tell you what you need to hear. Let's start with the biggest lie about buying a home. You have heard this before. You should spend no more than 30% of your income on housing. It sounds smart. It sounds responsible. It is also outdated. That rule was created when housing was cheaper. Healthcare was cheaper. College was cheaper. And life was not one subscription after another. Here is what most people do not realize. That rule assumes the rest of your life is cheap. In 2026, it is not. So when people ask how much income they need to buy a house, they are asking the wrong question. The real question is this. How much income do I need so my house does not quietly destroy my life? Those are 2 very different numbers. Let's talk real numbers. As we move into 2026, the median home price in the United States is around $420,000 to $440,000. Mortgage rates are expected to settle around 6 to 6.5%. Property taxes are rising. Insurance costs are rising. Maintenance costs are rising. According to data from Freddie Mac, Redfin, and the U.S. Census Bureau, the monthly cost of owning a home is up 40 to 60% compared to just a few years ago. Incomes did not rise the same way. That gap is where all the stress comes from. Now you might be thinking, but the bank approved me for more than that. Of course they did. Banks are not asking if you can still travel. They are not asking if you can invest. They are not asking if you can handle emergencies. They are not asking if you can sleep at night. They are asking one thing. Can you technically make the payment? That is how people making $120,000 a year end up living paycheck to paycheck. Not because they are bad with money. Because they trusted the wrong number. Let's do real math. Say you are looking at a $430,000 home. You put 10% down. That is $43,000. Your loan is about $387,000. At 6.25% interest, your principal and interest payment is around $2,380 per month. Now add property taxes. About $400. Add insurance. About $200. Add maintenance. At least $300. Your real monthly housing cost is about $3,300. That is before HOA fees. Before repairs. Before anything goes wrong. Here is where it gets really interesting. Most people do not look at that number and say this is too much. They say I can make it work. Why? Because humans are great at short-term optimism and terrible at long-term math. You are not imagining burnout. You are imagining survival. Survival feels doable. Until it is not. So what income does this actually require? If you want your house to support your life instead of controlling it, housing should be closer to 25% of your income. With a $3,300 monthly cost, you need about $13,200 per month before taxes. That is roughly $158,000 per year. That is not luxury. That is stability. And this is where people usually say, that is impossible for normal people. No. What is impossible is pretending the math does not exist. This is why it feels so discouraging. Your parents probably bought a house on one income. With less education. With less stress. You are not doing anything wrong. The system changed. The advice did not. Now you might be thinking, I will just put less down. I will buy smaller. I will refinance later. Those things can help. But here is what most people do not realize. Those are coping strategies, not solutions. They reduce pain now and increase risk later. Buying a house you can barely afford is like running a marathon at sprint speed. You will feel great at the start. People will cheer. Then your legs give out and you still have most of the race left. In the next part, we are going to talk about income levels, location differences, why being approved is not the same as being safe, And when buying actually makes sense in 2026. Because the goal is not just to buy a home. The goal is to still own your life after you buy it.